SACCI's Business Confidence Index has declined further from July's 99 points to a new low of 98.6 in August. And Neren Rau, who's CEO of the South African Chamber of Commerce and Industry, joins us now in studio. Thanks so much, Neren, for joining us this afternoon. Well, we had the RMB, our business confidence numbers at the start of this week, and that already painting a pretty dismal picture for the third quarter. 6 out of 10 respondents there unsatisfied with prevailing business conditions. On a month-on-month basis, though, if we're looking at SACCI's Business Confidence Index, doesn't seem that bad on the face of it. So just how dire a situation are we looking at?
I'm afraid that at first glance, the numbers look fairly high. But one must recall that 2 months ago, we've rebased the BCI against 2010. So we're now measuring the BCI against a year that was a fairly poor year from an economic point of view. And in order for the BCI to show substantial improvement, it would have to move away from the level of 100, which 2010 has now become that level of 100. The reason we did this was it was previously based on 2005, and 2005 was fairly distant in terms of the minds of analysts and consumers. So to make the BCI more real and more relevant, we moved to 2010. But unfortunately, 2010 was a fairly low base. So we need to see the BCI move substantially away from 100, which represents 2010.
And then where things do look dire is when you're looking at it on a year-on-year basis. Because as you say, 2010 already a low base, and compared to that, we're sitting significantly lower.
Absolutely. On a month-on-month basis, we're lower than we were in 2010. And when one looks at the year-on-year data, there's the majority of indicators or sub-indices are now negative. And that is quite alarming because previously one of the silver linings in the BCI was that on a year-on-year basis, there were still positive readings. Now the year-on-year data has also turned negative, and this is supported by fairly negative month-on-month data. And the prospects for this quarter aren't looking too positive from the point of view of the Business Confidence Index. And if one looks at this against a backdrop of prevailing negative conditions globally, one is concerned about the coming months for 2011. And more importantly, we were hoping for a strong 2012. That is now at risk. So we have to measure ourselves and behave very cautiously in the coming months to ensure that 2012 isn't put at risk from an economic point of view.
When you're looking at the sub-components of this index, though, what stands out for you on a negative note and then on a more positive side of things specifically?
We've introduced a new indicator called utility services when we recalibrated the BCI a few months ago. Utility services, which looks at local service delivery primarily, as well as a number of other measures, but all related to the supporting environment for business. Negative on a month-on-month basis, negative on a year-on-year basis. So there is a definite backward trend in terms of where we're going from a delivery point of view, a local economic development point of view, or business environment support point of view. And that's concerning because that creates the basis or the infrastructure within which business can operate. We're also getting negative readings now for exports, both on a month-on-month as well as a year-on-year basis. And that is a concern because we've always pegged our hats to the opportunity that the global environment presents for South Africa, particularly when the South African economy or the domestic economy is performing poorly.
And particularly when you've got things like commodity prices running at record highs at this stage.
Absolutely. So clearly we're not poised to take advantage of those runs. Clearly we're not yielding or benefiting from the returns. One could argue that it is because we didn't foresee this and we didn't plan accordingly, so we're losing out. And I think that's the common view, that we're losing out from the commodity run. The last aspect that renders negative readings on both a month-on-month as well as a year-on-year basis is the exchange rate, which has experienced some challenges recently. And other factors that are just reading negatively on a month-on-month basis are inflation and share prices. But we're more concerned when there's both a month-on-month negative reading as well as a year-on-year negative reading. Then those indicators start to point to specific problems within specific sections or sectors of our economy.
Let's take a look at where there are positives, though, because there are a few that stand out there. There's vehicle sales, there's real private sector borrowing, real financing costs, and then your precious metals prices. So precious metals prices pretty much an obvious there, but real financing costs and vehicle sales, one would assume that vehicle sales does stand out there.
Definitely, but that's against a low base, unfortunately, and that's the problem we have with vehicle sales. It is definitely an indicator of increasing activity in manufacturing and increasing participation in the global environment, given that our vehicle sector or vehicle manufacturing sector relies substantially on the global environment for its returns. And so that is an indicator, potentially a leading indicator of better things to come if one wants to be hopeful. On the real financing cost side, it's the containment of inflation that is showing its head there, and again measured against a period where there were fairly high inflationary pressures.
And obviously that is a picture that also stands at risk right now, where we know that, where we've had input pressures increasing. We haven't seen those prices being passed on, and that possibly yet to come and filtering through even further to inflation that the average South African consumer will experience at the end of the day.
Definitely so. We've also flagged that as a risk factor, and we'll know more about that next week when we look at the trade environment in particular, where we can then try to identify and drill down into what is the extent of inflationary pressures building, what is the extent of risks in terms of inflation in the coming months. So we're a week away from knowing that in greater detail, but right now there are definitely indications of a risk in that area.
Neren, very quickly, I mean, we've highlighted that there are global factors at play here, there are local issues that are coming to bear as well, and a question is how to realize business opportunities and actually equip the economy from here on out to turn the tide on economic stagnation, where of course job creation is paramount at this stage. How do you see that? Because we know that you've got an annual convention coming up, and that one of the key component or key focus areas of that convention this year.
Definitely so. The annual convention this year is probably more important than any of the conventions we've had in recent times, because we're looking to our convention to call on all key stakeholders in the economy to apply our minds jointly towards a plan of action that will present a better 2012. Right now we see 2012 as being hugely at risk. So all participants in the economy, small, medium and large businesses, government leaders, union leaders have all been invited, and we hope that they will attend. Academics, observers, analysts must please try to reserve the dates of 3rd and 4th October so that we can enter 2012 on a stronger basis. They can call our office on 4463 and 011 code, or they can look at sacciconvention.co.za to participate.
Well, Neren, let's leave it there. Thanks so much for your time today. Of course, Neren Rau is CEO of SACCI.